All right. Good morning, Komatelevu. How are you? Welcome to Forex.Today, the YouTube community. More than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. With that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. Nice to see you. I will be your guide on this journey we call Forex. That's so good. So let me know how it can help. Technicals, fundamentals, macroeconomics, oh, for sure. Let me know how I can help. You are the boss. I consider myself a servant in our relationship. So let me know how I can help. Do you want me to cover gold? Sure. Oil? Sure. S&P 500? Sure. Dollar? Sure. Yen? Sure. Yeah. Bitcoin? You bet. Cool. And I want to keep this event today short because we have a big event, a very big event in 2.5 hours. Is everybody signed up? Let me show you what we're up to. Okay, today, Quant-in-a-Box.co, we have a special event. Let me log in. I'll show you. Today, we are doing the Q3 Global Market Outlook at 10:30 a.m. It's 8 right now. Cool. And I have dozens of charts to share with you today. And some of it, I believe, will be very insightful. So, for example, if we look at conditions over the last 50 years that have every time created a recession, wouldn't you like to know what those conditions are like and where we are now? Oh, yeah, that's one of many, many things that we'll cover today. Hey, yo, it's Wayne. Just want to give you an overview of this Q3 outlook that we're going to do on Tuesday. Just kind of like all the other ones, we're going to go through probably, 2 or 3 dozen economic charts and reports, most of it actually from the... So anyways, cool, right? Yeah. I can give you a sneak peek of what it's going to be like, but let me give you that page so you can sign up if you haven't already. Will it be recorded? Yes. You will have 2 weeks. You will have 14 days to be able to watch it. But let me show you, hang on, let me pull up my presentation. And because I'm doing something a little bit different this year, or this quarter, let's do this. Okay. Yeah, let me show you, for example, this is something that we're going to cover. Obviously, we want to look at energy prices, global commodities, and stuff like that. But check this out. It's dynamic. Let's only show grains. Okay? Let's only show WTI. And let's go back 30 years. They're dynamic, bro. Isn't that cool? This is legit. I'm telling you, it's legit. We're going to have a nice presentation today. So I hope you take the opportunity and join. A couple other things I want to point you towards. If you want to learn how to trade and invest everything, FX Bootcamp is now rebranded as Investor Bootcamp because our conversations are much more broad and wide ranged than simply global money flow. So if you're interested in covering personal finance, real estate, hedge funds, trading stock indices, oil and gold, you should check out Investor Bootcamp. It's FX Bootcamp, but expanded. So you want to check that out. And then Trader's Way, a trustworthy foreign exchange broker. They also have gold and oil. They also have crypto. They also have stock indices. It's perfect, bro! But here's the thing, they're trustworthy and they're ethical in my humble point of view. So you should check them out, tradersway.com, see if they can earn your loyalty and respect. I'd open up a demo account if I was me, check out the back office, download MT4 or MT5 or CTrader, play some demo trades, and see if you can fall in love. Okay? They want to earn your loyalty and respect, give them a chance. Okay? Cool. So that's that. Welcome to the world. Welcome to the world. Cool. So why don't we just start here? Here's the trade plan from, a week ago? We're getting there, huh? We're getting there. Okay? What do you think? Okay, is it plausible? Is it possible? What would you do in a scenario like this? This is my oh my, WTI, West Texas Intermediate. Very nice, huh? If you take the oil trading course at Investor Bootcamp, if you've never done it before, I'm not sure what you're thinking. You're like, oh, he's going to do a couple of charts on oil. Maybe he'll cover Brent. Maybe he'll cover seasonality because he knows that from Quant-in-a-Box. Sure, Pete. Okay. But it's, I think, 16 hours long, and it's so incredibly detailed and focused. You will be blown away every single presentation because you will learn like the geology of oil. We have to go through geology. And then we go through the technology of how do you even find oil? Like how do you even think there might be oil beneath your feet that is like a mile below your feet or more than that? How would you even know? How do you know what kind of geology that might hold oil? And then if you think it's there, how do you even verify it before you drop millions of dollars in digging a hole that deep? It's amazing. Okay? And then this idea like, what about like, what does the oil patch look like in the sense of like, there's a little Christmas tree on the top of the hole, What does that do? And then there's a pipe, it goes somewhere else. What does that do? Does it regulate the pressure? What if there's too much pressure? What if there's not enough pressure? And then where does it go? How do you get the sand and the water and the gas out of the oil? And then how do you do this and how do you do that? And oh my God. It's like, it's so crazy. You really, 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 really should take it. It's way beyond, I think, what most people's expectations are. How about going through the contracts that, let's say a farmer that has oil under her fields, and she signs a contract with an oil company. Well, what does that contract look like? And how is that different from Europe? What about distribution and retail? How does a gas station make money? How much money do they make? I mean, just amazing. I love it. Love it. I'm telling you, love it. That's the detail that Investor Bootcamp goes into. It's insanity. It's way beyond probably what you would expect. Cool. Oh, and it's included for $88 a year. It's so stupid. It's so stupid cheap. Yeah. Anyways. So that's kind of interesting. We'll see that there's some technicals going on in here, but the big question I think we're all asking is, you know, have we formed a floor? And it seems like we have, huh? And then you form a floor and you get a higher high. So maybe from here on, you're a buyer of the dips. You see? So that's the current trade plan coming up. You want to look near support, near the dynamic moving average, near a Fibonacci. You might want to throw in, let me show you. Here's how the wane do. So psychologically, you might say, okay, now you're a bull. Great. So then you say you're interested in day trading this. Okay. And you're a bull, so you're not interested in bearish nonsense. And then you drop into an hour and you are in a possible buy zone for the day. Selva. Okay. Now, is this an actual buy? Maybe. But, okay, maybe. I think we'd prefer to be closer to the 71 or 70, but that could be it. We might just be waiting for that 4-hour 21 to catch up, which you can't see, obviously. This is only a 1 hour. Okay? But what if, pray tell, you do get a higher high, higher low in the next 24 hours? Then that might be game on, right? She says, likes the virtual field trips. Yeah, we did, what, 4 or 5 of them? So, for example, I think what we looked at is, if I recall, gee whiz, do I even recall? How you convert Canadian heavy oil from the sands into a usable product that can be blended with American oil. I think that's one, isn't it? I think we also shoot some fields, right? Richard says, so let it make a higher high and then buy a higher low. Well, if you're a bull, you only can do 2 things, Richard. Let's make it simple. There's 2 things you can do if you're a bull. Buy at support or buy a higher low. Okay, and ideally a higher low after a higher high. So, by definition, you could buy here. You could. Or you could buy here. Okay? That's it. Whatever else you're doing, not you, but anybody, if anybody is doing something else, it wouldn't be trading properly. Because I think we can all agree, bulls buy at support or they buy higher lows. What else does a bull do? I don't know what else a bull, I don't think a bull does anything else. But what we are analyzing is the current price is a maybe, but it's a little high. Meaning what would be preferred is a down and then an up. That'd be more ideal. And it could be down there, or it could be more like Okay? So meanwhile, as a bull, you're just trying to confirm when do I get this or when do I get this? And of course, you might get it now. So which one? Okay? All you have to do is decide if you're a bull. The rest is easy. The trading part should be the easiest part of your trades. Trading shouldn't be difficult. If you find it difficult, it's probably because you're trading blind and you don't have analysis fundamentally, and you don't have a bias. So you're always just chasing, like, what does MACD tell me? Well, MACD is measuring the distance between two moving averages, but it doesn't tell you whether to buy or sell. You see what I mean? There's a difference. If you know your position in the marketplace, things are clearer. Maybe they're not easier, but they're clearer. Okay, Pete wants to do nat gas. I have Ripple here. And Pete's a Ripple guy. Huh? Okay. So we have stabilized after this big move. It's made a 50% retracement and stabilized. So if you feel like taking some risk, that would be the way you do it, technically. But we need to move this over to Natty. Okay? And so if technically, if you wanted to buy it, yeah, you could do one of these. So we're already done today's trade. You see that? There's the buy zone, there's the exit zone. So today's trade is done, and you'd be setting up tomorrow's trade, which would look something like this if you're a bull. Right, Mr. DeVry? Or is it DeVry? Going back to the training course, this is our buy zone down in here. I think it was, or was it even lower? No, that's it. So after the training course that we did on trading I think I called it the energy complex made easy. Our buy zone was here around $2. And now we might be in a scenario like this. Is it DeVry or DeVry? I know it sounds terrible when I say it. Or is it something else? Is it EEE? Or is it I? Is it EEE or is it I? DeVry. Freeze. 1 times I. DeVry. So my WTI gold. Okay, so we did this last week. We had this set up dropping from 1962 down to 1943 and then rallying up to 2000. And so far, genius, genius, genius. Hey, you're welcome, everybody. Okay, so we've hit 1970. So $30 up. Cool. That ain't bad. Okay. Bitcoin is facing some risk offs, and right? Ooh. Could get interesting. We're tickling the 30. Taking a look at long-term setups. Dollar's still quite weak. We've done a 618 to 121.4. The prediction is 1382. Okay, so if you get this move, it predicts that outcome. Meta. Okay, Kiwi selling off. Sweet. The V is not pronounced like an F. It's not fry. Is it fry, Peter? DeFry? I think it's DeVry. DeVry. I think it's DeVry. Yeah, I suppose it depends on where you're from. All my Indian friends call me Vane. And I'm like, you're so right. Oh, Vane, you crazy Vane. Anyways, maybe I am vain. Yeah, right. That's what I thought, Peter. It's not an F. What are you talking about? Yeah. Morning, Vladdy. So anyways, why is the Swiss franc so high? Apparently somebody may not have resources to fundamental information. I will show you right now why. And then you'll say, I wish I knew that information. And I say, well, you can just pay money and get it. I will need to go here. And there's your answer. Right here. I suppose if I'm going to do it properly, it'd be this. There's your answer. What the Swiss National Bank's going to do over the next year. See, I can tell you, I can predict rates going out a year in advance for every central bank in the world. Well, the ones we care about. Every major central bank in the world. I can predict going out into a year in advance. You're like, well, what about Canada, eh? Yeah, what about Canada? What about Switzerland? There's a relative difference. How is it different from New Zealand? Uh-huh. So you're like, whoa, dude. Yeah, and look, Kiwi's down, Swissies up. Oh my God. All you need to know is to know. Right? You see what I mean? Yeah, you should have the data, my friend. Cool. It's good to be in the cool kids club and trading your retail Forex account like you're an institutional investor. You have just as much information as Goldman Sachs. Costs you $79 a month or even less if you're a pro member. So anyways, cool. So whatever. Let's move on.com. Let's do some yens. Oh, sure as shit. Oh, dang it, you stupid pound. I entered a second trade. Oh, it's so funny, isn't it? It's so cruel. What a cruel world. I entered a second trade like right here. How funny. And it came all the way up, hit me at break even and down. So how funny. This is 100 pips up here. So if I make a lower low, I can lock in, I don't know, 200 pips or something. How funny though. It came up just enough to knock me out. You son of a... Anyways. I don't like holding on double bottoms, that's all. Yeah, don't you just hate that? Faux show, but it happens all the time. If it had made a lower low, I wouldn't have moved the stop. Because it didn't, I had the risk of a flip. So I had to bail on that. Japanese stock market got red on the screen, yen strength. Okay. And that would not be favorable to Kiwi, as I just shown you. So the question was, why is Swissy strong? So I just did comparative analysis, okay, of central bank expectations, not just of a hawkish Swiss National Bank, but of a dovish Reserve Bank of New Zealand. I was able just in seconds to compare the two, predict the future, and look, I sold Kiwi. Why? Because I have a model going out more than a year. In fact, it's 18 months, isn't it? It's a year and a half I have modeled out into the future. Dude, and by the way, where did I get that information? The central banks themselves. It's not a guess. It's not a prediction. It's what the central banks have done. Remember, they have a staff. They have hundreds of quants, right? And economists. And they get together, they do all the math, they do all the models, and they predict the future based on their math. And then they release the data publicly, except 99.9% of the public don't know. Cool. Well, a quant boxer would now know, and you would be able to thread this needle maybe a little bit better, huh? Cool. So that's a day trade currently, by the way. You see the day trade? Down, 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 up, up, sell. Down, 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 down. This is the target. Done. That's a day trade. But now I might turn into a swing trade. Well, again, that's your alpha. Now you have to decide how to manage it, okay? And you might say, Wayne, okay, I could take my profit and run on the day trade, but this could end up being a swing trade between now and tomorrow, okay? And so you sell it at 88, going for 86, simple little 200 pip trade. Sweet, easy. But then your alpha might say, well, this might actually be something that happens until we get to the Fed meeting. So ultimately, now your pissy little day trade worth 100 pips might be worth 200 pips, but now your pissy little swing trade is not worth 200 pips. Okay? Now you're on your way to 83. So it's 500 pips. So what do you think? Is it worth 100 pips? Is it worth 200 pips? Or is it worth 500 pips? What is your plan? And of course, you could have another one here and a third one here. Oh, does anybody have the number for that? Who's got the retail number? We'll zip over to the buck. Golly, I need to eat another breakfast. I am hungry. Okay. You know, being Canadian, I have a lot of love for the Canadian dollar. But there's a lot of disappointing numbers if you look at it. And I've been looking at it. And we'll go over it today at 10:30. when you look at what Canada is doing and what it has been doing, you can't help to be a bit disappointed. And it's sad. It saddens me. Like, honestly, it saddens me. Somebody's made some poor decisions over the last few decades. Maybe it's always been that way. But it's a little bit surprising and a little bit, and quite disappointing. So, but you can see I'm leaning on pro CAD. Okay, but on the longer run, okay, so this is Canadian dollar weakness, and then we've hit a top. Okay, Canadian dollar weakness, hit a top. So if everything is right as rain, maybe we're on our way down here and there's a nice recovery. Now, for that to happen, wouldn't that be great? This is not a prediction, by the way. That's more like, wouldn't that be awesome? Okay, wouldn't this be awesome? Yeah, that would be awesome. That means two things. The US is doing fantastic. Fantastic. And Canada's just rocking it. But I think based on what would have happened decades ago, Canada actually would benefit less and less if the United States did amazing. And that's kind of the disappointing part. Okay. Okay, but look at that, huh? What do you think? Could we get down here? Do you see? Like, do you know this? This is the USD CAD. That's our top, and that predicts 1.21.83, if you want to be specific. Minimum target. And what I just drew out only gets us to support. And this really gets us to the bigger level of support, right? So that would be hopeful. That means the United States is doing really well and Canada is benefiting. Thank you for posting, by the way, guys. What's the year over year? Because I always chuckle. Do they really know the difference between 0.2 and 0.3? Really? Especially like GDP. They're like, oh my God, GDP is up 0.1%. You're like, wait, you're looking at an economy, the largest economy in the world, 350 million people involved in this thing. And you have that kind of accuracy? Like, seriously? But anyways, if you have a year over year, it paints a better picture. But we'll look at this today, of course. Not only will I show you retail sales, but I don't do it through retail sales, I do it through consumption. And I'll show you what people are actually spending their money on. So retail sales doesn't tell you much. You might say retail sales are down, so that's bad, right? Yeah, but what if it's just gas prices are down? Sorry, petrol prices. What if petrol prices are down? Does it actually mean anything? Don't you need to know that? Are retail sales falling because ain't nobody got any money? Or is it just gasoline prices are down? And when you go to the gas station, you pay 0.2% less for filling up the Porsche. Mark Williams. Shame on you, Mark. You go to media. Dude. Okay? Yeah, I don't want you to do that. Okay? I want you to get it from the source itself. I want you to read the report. Okay? Yeah. Shame, shame. Okay, dollar strength, dollar strength. So what that means is people are disappointed. Oops. But still no major movements. Okay, still mixed. Remember, we're doing this calculation by tracking in real time the VIX, gold, S&P 500, yen, the dollar index, and the yield on the 10-year T-note. And so far, it's flat today. We are losing on the monthly basis. So anyways, cool. So is everybody signed up for the event coming up in 90 minutes, just 100 minutes from now? Is everybody signed up? Because we also, in a few minutes, have industrial production and capacity utilization statistics coming out. I will show you that graphically over time. Marv, you click the link. Okay? 90 minutes from now, you should be logged in. So an hour is what, almost 10? Hour and a half? Yeah. So about 90 minutes from now, you should be logged in. And we will cover some beautiful stuff. And like I said, up until now, I've done PowerPoint presentations. I will show you. Let me go to the end of a presentation, because I have some pretty nice data that we've gone over. So back in the day, in the outlook, in the annual outlook in January, it was 49 slides long. But I want to show you that back in January, I thought down, don't follow this line. This is a historic context of the 2008 crash. So I said no real crash, but probably down, and then up Q2, and it was, and then possibly kind of a flattish down Q3, and then a rally up at the end of the year. Because part of my conclusion is a recession's not going to happen in 2023. Oh my God, what? In January, when everyone was freaking out about the end of the US economy, I said, yeah, we got a lot of things to be concerned about. But I said there are two parts to a recession. Can anybody confirm any of this? Two parts of a recession. We only had number one, but we didn't have number two yet. So no recession yet. And so quarter after quarter, we have to look at evidence to fit number two. Is the recession starting? And in January, the answer was no. And then in Q2, no, we were bulls in Q2. And the stock market is up. The NASDAQ is up 36.1% this year. So now I have concerns, which I said in January, about Q3. So now we're going to have to see, where are we in that context? And is that second part of a recession showing up or not? Because if so, Q4 might be horrible. So we need to look at the evidence to know what the next 90 to 180 days is going to be like. It's really good stuff. You really should be there. My conclusions are irrelevant, so to speak, because they're just my conclusions of interpreting data. You can look at all this other stuff and disagree. Perfectly fine. This is how investment houses make decisions. You could have a hedge fund that's long and a hedge fund that's short, and they both make money. How do you make money in a scenario like that? Well, a hedge fund that's a bull only buys dips. A hedge fund that's a bear only sells lower highs. And if you do that, you'll probably be okay. It's retail that just kind of does both randomly that gets nowhere. So more importantly, I'm trying to show you, how does an institutional investor make decisions? How can you think 3, 6, 12, and like I've shown you today, 18 months in advance? I showed you the difference between the Swiss central banking policy and the New Zealand central bank policy out to 2025. 2025. And so if you think big, you think like an institutional trader. If you don't think big, you probably don't think at all, and I think that's a risk. So I hope you join me on this quest to not improve your trading, but radically change the way you trade. And I hope you say, oh my God, that's everything I want to learn, Wayne. Join the meeting today. And if you're like, no, I just want to do some skippy scalping, there are plenty of YouTube gurus that will show you how quick they can get rich and how much money they have. That's not me. I'm the get rich slow guy on YouTube through value creation and actually running a sustainable business, which we call trading and investing. If you like that, join the revolution. Peace on earth. May the pips be with you. May our profits be above average. I will see you in about 90 minutes. Oh my God, it's so exciting. Cheers. Here's the link again. It's also in the description. Have a wonderful day, y'all. Oh, and if you are a member of Investor Boot Camp, in the swing traders and the day traders are meeting at 4 to do our stop, look, and correct session where you upload your trade plans, future, current, or past, and we go through it together, and I give you personal feedback. Don't forget that. It's a huge day, huge day. So I'll see you soon. Cheers.